All right, we are going to go ahead and get started for our 3 o'clock breakout session. We are excited to have Jim O'Donnell with us. He is going to be talking about tax implications for owner-operators. So at this time, I am going to turn it over to Jim, and he's going to take it from here.
Thank you very much. I hope everyone's having a good afternoon, and thank you for joining us. I know taxes aren't the most the sexiest topic to talk about, but they're very important. And what we want to really emphasize throughout this, this session, and then of course the Q&A at the end, what we really want you guys, everyone out there that's listening, to understand how the importance of not taxes necessarily, but the management of your business, which of course is going to have tax implications. It's those tax implications that we have to call and talk to our drivers well after the fact, like maybe, easily a year and sometimes 18 months after they've already conducted that business, that they're now finding out how much tax is attached to that. And it's that businessman that really takes a hit because he just hasn't been paying attention to the business side of it. And that's what we're hoping that we can get a little bit of education going here today. And then, of course, as I said at the end, that question and answer period, we really, really encourage any and all questions. Now you can remove that oversized forehead there. Thank you. And now, what we want you to do is, a lot of our folks that come to us, first-time users of Trucker Tax Service, what they'll do is they'll talk about having gone to a tax preparer, and in a lot of cases it's a friend or Aunt May or even a big box store that literally have no idea of your industry whatsoever. They have zero industry experience. I've had drivers that have come to us that have spent an enormous amount of money. I'm talking in excess of $2,000 to get a tax return done improperly. And this is done by a CPA firm that has no industry experience. Do not, when you're picking a tax preparer, the first question you should say is how often, how many of your clients have you done that are in the trucking industry? It should be that should be the primary question coming out of your mouth as you're looking to hire that tax preparer. Now, the other issue here is also that because of our day and age now with software and so forth, most tax preparers don't really know the tax law. What they know is the software, but not the tax law. And that's where you want to make sure that you're dealing with somebody that knows not only the tax law, but your specific tax law that's important to your industry. Most of these preparers out there these days, what they do is they'll come in and they'll work like, maybe mid-January to late April, and then you don't see them again. That is not who you want. You want somebody there that you can reach out to anytime throughout the year. You always, always want to make sure that this is a full-time tax preparer working his trade. Now, the other thing here that you want to be very careful of, if you go into some of these big box stores, what will happen is they'll say, okay, yeah, we can do that for you for, $200. Well, at the end of the day, what happens is you end up getting charged $500 because what they did is they charged you by the form. And what it is just a bunch of crap forms that the IRS requires. The software spits them out at no charge to the preparer, but you get dinged for every one of these forms. Make sure when you're talking with anybody that's completing your taxes, make sure you get a bottom line number of what they're going to charge you at the end of the actual preparation. Okay, Amber, we can go to the next. Now, what you want to do is, and this is a little bit, overlapping here, I guess, but what you want to do is make sure that you're using somebody that's an expert in the industry. There's not a lot of us out there. You could probably count the real qualified tax preparers, tax preparer companies that have trucking industry probably on two hands, maybe even one, if you want to be real specific, because there's very few of us out there that this is all the focus is. And when you don't land on one of these, individuals or one of these companies, you're just taking a gamble. What you're doing is you're just hoping that these folks have the knowledge that they need. Now, this is another thing about what I just said about, they charge by the form, but a lot of these tax companies or tax preparers will have to do, they have to go out and educate themselves on your laws, on what is specific to the trucking industry. Well, they charge you additional for that, because what they're doing is they're charging you by the hour to look up these laws that they're not familiar with. So you always want to make sure you're using an industry expert. Now, the other thing, and this is very important, always ask. What you do is you have, as an owner operator, lease operator, small company owner, you have a small company. The IRS is going to look at that with a very fine-tooth comb. What you need to do is make sure that that return is completed by a CPA. A CPA has a master's in accounting. They have to take ongoing education every year to get themselves up with the current tax laws and so forth. You want to make sure that your business is in the best hands available. And not only should that return be completed by a CPA, but ideally a CPA that has had tons of experience within the trucking industry. Now, this is another overlap here a little bit, but make sure that that office that you're speaking with, or that CPA in particular, is going to be there year round, that he's not only there for a couple of months during tax season and then you don't have the opportunity to speak with him throughout the rest of the year. There's plenty of reasons to actually reach out to a CPA. Now, with us, and I know this isn't about our company here, but we have CPA services. Actually, they're called CFO services, where you can call in at any time and actually have a conversation with a CPA about any aspect of your business, which is very critical. Like if you're out there, you're looking to purchase a new truck or a trailer, or you're moving in, I don't know, whatever the business related question may be, you want to know what kind of tax implications that's going to have. You're going to want to make sure that you have access to somebody to ask the right question before making that financial move. Now, the other thing here that is a little bit of an overlap here is that those published rates and so forth, what we do for a fact is we just charge a flat rate. We're not going to go and charge by the form or charge by the hour. We're going to let you know up front exactly what it is. If you're a corporate return plus a personal return, it's going to be a little bit more expensive than just a personal return, of course. But we're going to let you know those prices up front. We're not going to charge you to do the research because we're already experts in the field. And if not us, what you want to do is you want to find somebody that charges similar type fees and also has the expertise within your industry. Okay, Amber, we can. Okay, this we're going to probably skip by this pretty quickly. Actually, you know what? I'll leave this up here for just a little bit so you guys can kind of look through and see what type of deductions are available to you. This is just a very brief list of what is available out there. Most drivers have literally no idea what additional deductions are available to them. I mean, of course, you know, they know all the major deductions, the fuel, and of course, truck payments, insurance, you know, any of those type deductions, but they're not aware of all the small stuff. It's the little stuff that really adds up quickly. What you want to do is make sure that you're accounting for everything that you do. The general rule is this: if you've purchased it to go on the road with you, or if you purchase it while on the road, most likely it's going to be a deduction for you. You always want to make sure that you're keeping track of everything that you purchase on the road. Now, we're going to touch on that here in a little bit of a good method of how to make sure that you're purchasing or that you're tracking these properly. But what you want to do is you just want to make sure that, I don't care if it was a $5 packet of batteries for a flashlight, what you want to make sure is that you're tracking that you're keeping a good listing of all of those deductions, because that little stuff adds up very quickly. Throughout a day, you easily spend, I don't know, it could be easily $20, $30 a day on little stuff that sometimes those receipts never even make it to the truck. So what you want to do is you just want to make sure that you're capturing everything properly. You know what, Amber, we can go to the next slide because this is kind of tough to read for these guys anyway. But anyway, okay. And what you want to do is you want to be aware of not only, as I said, just the truck expenses, but things such as per diem. What I can't tell you, per diem is by far the hardest deduction for the driver to calculate because they haven't kept a proper log. Now, everyone out there thinks that, okay, I've got my e-log going, the IRS, or I'm sorry, the Department of Transportation requires that everyone has an e-log now. Well, that's not the same log that the IRS requires. The IRS doesn't care how many hours you're on the road. They only care that you were on the road that day. If you're not keeping a personal log of the nights that you spent on the road, you're shooting yourself in the foot. And the reason is right now it's $69 a day that you're entitled to every night that you spend the night in the truck. Or, if you're a nighttime driver, you're sleeping through the day. That day, you're getting a full $69. Now, the IRS only allows 80% of that, which is $55.20. We'll do that calculation for you. But that per diem, that $69 a day adds up very quickly. The average driver, a good aggressive driver that's out there 300 nights a year, I mean, you're looking at a gross of over $20,000 of deduction that is available to you that most drivers don't take full advantage of. What they do is they just kind of give us, I think I was on the road about, 20 days a month. Well, if you're on the road 25 days a month, you've just shot yourself in the foot by 60 days. I mean, that by itself is over $4,000 of deductions that you've missed out on. And that means $4,000 of additional income that you're going to have to pay tax on just because you didn't keep track of it properly. It's something that's very easy to do. You stop for the night or whatever your driving pattern is. Whenever you're done for that day, all you do is you have a little portfolio book. You just put in, okay, I'm in Dallas, Texas tonight. Boom, you're done. It took you 30 seconds. Less than that possibly. What you want to make sure is that you're paying attention to these deductions that aren't just truck related. Okay, this is transportation related, not truck related. Now, what I touched on before, we really, really emphasize using one card to purchase everything that you buy, everything. And it can be a debit card or a credit card. Actually, Amber was saying that there was a seminar earlier today that fuel cards can be used within truck stops. And I don't know how often they're available for something like that, but that's a good source as well, because now you have one place to go back to find, like, hey, I purchased this GPS, I don't know, it's like April of last year. I can't remember what I paid for it. Well, if you know the card that you used, it's an easy find. You just look up the credit card information there, and they'll show you all that itemized itemized purchases that you made throughout each month. And so it's a good source if you're not very good at writing things down, which most of us aren't. Using a single credit card or a single card of some sort is a really strong source because it'll do the tracking for you. It might be a little bit of a pain in the butt to go out there and find those transactions, but they're out there for you. So that's what you want to do. And what I would really strongly advise is no cash purchases. It's really rare. Now, you can go in and buy yourself any kind of lunch, deli, hot dog, whatever, any of that can be purchased for cash because that's going to get written off within your per diem. But anything else, I don't care if you've walked in and you buy that deli hot dog and on your way out you buy that $5 packet of batteries, make sure you keep that receipt because those $5 batteries are deductible. So you want to make sure you're using a card always, always. a single card. Now, okay, Amber, you can go to next. What I was talking about before, to try to keep track of expenses, there's a bunch of bookkeeping apps that are available out there. I don't even know how many there's available, but there's a ton. I mean, it's got to be dozens of them, and most of them are very affordable. What it really boils down to with a bookkeeping app like this is discipline and getting yourself into kind of educating yourself or forcing yourself to have to get in a good habit of capturing your expenses on a daily basis. We offer an app actually through TruckLogics that our drivers can capture anything not only daily but multiple times throughout the day. And not only does it capture the expense immediately or capture that income immediately, but you can also create either an immediate profit and loss statement or a year-end tax statement showing you exactly where you are with your profitability and, of course, the tax that's attached to that profitability. So now you're looking to purchase maybe a new trailer or add a second truck or something of that nature. You want to know what kind of tax implications you're going to have. Well, the best way you're going to have that is if you've kept track of all of your income, all of your expenses throughout the year via an app that you can just open up right there on your phone, take a look at it. And in our case, what you do is you have unlimited calls into somebody like myself or a CPA that will answer any questions you may have, and especially referring to, hey, yes, this is a good idea, or no, this is not a very good idea to move forward with the purchase of some, like a very large asset. We get a lot of our guys that are our little program is called Tap App. It's through TruckLogics, but it's Tap App. Our Tap App clients will call in. This time of year is a big time of year that they're calling and saying, hey, should I purchase a trailer right now because I want to get, a write-off next year, whatever. Well, there's a couple of issues there. One is when you buy something in the fourth quarter, you don't get the full write-off of it, depending on the size of the purchase. My CPA could probably talk about that one a little bit better than I can. But the second thing is what you want to do is we'll look at your numbers while we're live on the phone with you and let you know if it's going to be the right move or not. What we want to make sure is that your tax implications are as low as possibly can be, and that's where the tracking and the tracking of all that income and expense is so important. But more importantly, it really falls on you again, and that's the discipline. And when you get that discipline in place, like you stop, I can't tell you how many drivers that I've spoken to that like their routine is the moment they stop, they open up their phone. They haven't even jumped out of the truck yet. They open up the phone. They go boom, boom. They put in their log of where they are in the country. So now their per diem is captured, and they put in the 2 or 3 expenses that they purchased that day. It took them less than a minute, and now that weight has just fallen off their shoulders, and they can go in and enjoy their dinner. So it's a very, very convenient and easy process. It's just discipline to make sure that you do it. And once you get into that routine, it becomes part of your day, just like checking, as you walk around the truck, making sure everything looks good before you take off. Well, guess what? Making sure your business is intact is equally as important. In fact, in some cases, quite a bit more important. So and that's that second line there where it releases the stress, which is absolutely correct. How many times have you woken up at night going, oh, I forgot to do, I don't know what I'm doing with, whatever, financially related. And it's because it's the unknown. Well, that's where keeping up on your bookkeeping releases that stress. And then it also, what you can do, like with our situation, the profit and loss statement that the TruckLogics app produces, you could take that and take it to a financial institution. If you're looking to, finance a new truck or maybe finance a personal vehicle or purchasing a home, well, now you have, as a 1099 driver, where, of course, you don't have a W-2 paycheck to give to, the financial institution, you now have a solid business plan that you can hand right to that financial institution that's equal, maybe not equal, but as strong as a weekly paycheck that you would show them, because now you're showing them that not only your gross amount of money, but the net that you have coming in. It's just real important to stay on top of that business. Okay, Amber, we can go. Okay, now what we're going to do is we're going to kind of segue into incorporation. I'm sure most folks that are listening to this right now have either talked about incorporating, or somebody has talked to them about incorporating, or you've heard about it and you're just not quite sure what it all entails and so forth. I think there was a seminar earlier today that talked about managing or building your own business and so forth, and I'm sure they probably discussed it there. But what we want to do is the incorporation piece, we can help with that process. We actually have folks that do it on our behalf that we would hand off to, like a partner, because that's not our wheelhouse. Our wheelhouse is managing the money that comes in. Now, if you've incorporated, what we did here, this little chart here that's on the screen, what it shows that based on 100,000 of net income, okay, this is the difference of the total tax paid. If you're an owner or lease operator that is, you complete your taxes on what's called a Schedule C. A Schedule C is basically, it's a form, it's a document that it's within your own personal tax return. It's like a profit and loss statement within your own personal tax return. What we do is we account for your gross income and then all the expenses that you've given us, and it all goes into certain, the dozens and dozens of expenses get put into about maybe about 10 different categories on this Schedule C. Well, then that net profit from that Schedule C comes over to your personal tax return, and that's where you pay taxes. Now, the difference between a Schedule C and if you were incorporated or taxed as a corporation, the difference is self-employment tax. That's the largest difference by far. What self-employment tax is, it's basically Social Security and Medicare. The difference is with self-employment tax, what it is when you own your own business, and I don't care if you're just a Schedule C, you don't have yourself incorporated, the IRS still puts you as owning your own business. Well, now what you are is you're both the employer and the employee. When you're a W-2 paid driver or a W-2 paid anything, where you're getting a weekly paycheck and you have taxes taken out every paycheck, you have those taxes taken out. What happens is the employer is on the hook for 7.5% of Social Security and Medicare, and you're on the hook for 7.5% of Social Security and Medicare. When you own your own business like this as an owner operator or lease operator, what you are is you're on the hook for the full 15%. So now that doubles, and also you're not having that removed every paycheck. In fact, it's never removed throughout the year. So that's clicking along, and that self-employment tax can be extremely painful at the end of the year. And we have to explain it to so many drivers, especially our new guys that are coming on board, that the importance of managing your business properly. What we do is, I'll just do the numbers here real quick. You can see that as an owner operator, based on that 100,000 of net income, you're almost paying $24,000 in tax, where if you were taxed as a corporation, or as what we call an S corp, that drops all the way down to $17,000. So in this scenario here, you've saved right at $7,000 in tax, and it's just because you're being taxed as a company instead of as an individual. And the kicker here is the IRS even encourages it, because now it's a much better flow for them. Now, you do have to do a corporate return and a personal return, but if you go to the right company that understands how to make this happen, it's a very easy thing done. With us, it's almost identical form. The only thing we need additional on top of what you would give us in the form of expenses and so forth as an individual, the only thing difference is maybe some checking account information, like what was your beginning checking account in January and your ending checking account at the end of the year. I mean, it's literally very, very easily done when you have the right people out there. But now this is the thing. You get yourself incorporated, that self-employment tax disappears. Well, it doesn't disappear necessarily, but it goes down significantly. But what you have to do is you have to make sure that you're managing yourself. The IRS doesn't like that because they like their Social Security and Medicare. So what you want to do is you want to make sure that you pay yourself as a payroll, as an employee of your own company. Now, we're not going to have time to go through that now, but if anybody has any questions, I think our contact information will be there, and I'd be happy to talk to anybody that wants to give me a call here over the next few days and talk about how paying yourself a W-2 wage as an employee of your own company could save you literally thousands of dollars on self-employment tax. So, Amber, yeah, I think what we can do is we can go down the next one. Oh, that's right. What we want to do is, and I'm not going to throw other tax preparers under the bus. Well, maybe I am, because they make so many errors because they don't know your industry. I can't tell you how many drivers over the years have told me that their tax preparer was actually frightened at putting in the amount of like fuel. You know, like when you have $70,000 of fuel, they're like, there's no way we can put that down. Let's just make it 40. And I'm not kidding. This has happened over and over, where drivers are just not getting properly represented. And so you just want to make sure that you're really talking with the right people. David, a guy that works with me, wanted me to put this in here. We just had right here, we had filed an extension form, new client that came to us back in, and I think it was March timeframe. What we did is we filed an extension form. They put all their information together. They had already an existing LLC, which limited liability company out there that they weren't using, but they did have an EIN, an employer identification number. They had already established this, I don't know, maybe 18 months prior. Well, as we're talking to them during this period, during the extension period here, they had an extra 6 months. What we did is we found this out by asking the right questions. Well, we went ahead and got them incorporated via, we attached a form, it's called a 2553, to their existing tax return. We file it along with, we create what's called an 1120S, which is a corporate tax return for them. We ended up, this client by themselves, they owed, it was somewhere in the neighborhood of, it was over $12,000 is what they owed. When we got done with filing their taxes properly for them, filing both a corporate return and a personal return, their amount of tax due dropped from $12,000 all the way down to about $1,400. It was a significant drop, and it's all because it was attached to that self-employment tax. What you do is you need to make sure that you're being taxed properly. If you have anything, and I think the break-even point is about 40, maybe 50,000. It just depends on each individual. But if you're going to have 40, 50,000 or higher net income within a year, you seriously want to think about getting yourself incorporated, because you could save yourself thousands and thousands of dollars on tax. So now at this point, I think I kind of warp sped through that, but we only have about, I think, maybe 15, 20 minutes left here to do some question and answers. So we want to throw that. I'm going to throw it back to Amber real quick and let her tell me how the next step is here.
Yeah, thanks for all of that information. Again, just really valuable information for these drivers. So I have some questions, and then if we have questions that come through chat, I'll read those out loud so that those can be answered as well. So I will read the questions, and then Jim, if you want to jump in and answer the questions, we will go from there.
Okay.
All right, cool. So one of the questions that we had submitted was, If I have been using the same tax preparer for years, is it really necessary for me to find an expert in the industry?
That's a pretty easy answer, and the answer is absolutely. And the reason is we've had drivers that have come to us with tax returns that have been done in the last 10 years by the same tax preparer. What we do is we do their current year, and they're like, holy crap, how did you get me such a great deal? And I'm like, well, it's because we know what we're talking about. And we'll go back and look at past years, like 3-4 years past, and in more cases than not, what we'll do is we'll find huge holes where we end up filing uh, uh, I just lost the name. Anyway, what we do is we refile that completed tax return for, what is it?
Do an amended return.
Amended, thank you. Sorry, brain's mushy. Yeah, we file an amended return for them, and what they realize is that they thought very solid tax preparer has been doing their taxes wrong for years. So just start asking the right questions. Even if you have been using the same preparer for years, just make sure that they're doing everything proper for you.
Okay. All right. And then we had somebody submit a question. What is the difference between full per diem and partial per diem?
That one is easy. That what it is, full per diem is when you're out and you've spent the night in the truck. If you've spent the full day and night and you're sleeping in the truck, you get that $69, which is full per diem. If you're out on the road and you're out for a couple of weeks and you come home and the first night that you're home, you're actually sleeping in your own bed, that's considered partial per diem. That's a partial day. Most tax preparers don't understand this. Most tax preparers would not give you any per diem for that day, when in reality you get 75%. The IRS allows you 75% that day that you've returned home, or in this case, it'd be almost $52. So make sure that whenever your tax preparer is calculating per diem, that they're calculating it properly with both the full and partial days on those days that you return home.
All right. So can I deduct my dog as a trucking expense?
The answer is yes. Now, I think the IRS and Jim, our CPA Jim, is online here too, and I might have him pipe in here in a moment, but I think there's a regulation that the dog is supposed to be at least, I don't know, 20 pounds or 30 pounds. I'm not sure what it is exactly, but basically what it boils down to, they become security for the truck. So you go in to get yourself dinner or something like that, go get yourself showered up and so forth. Well, the dog is securing your truck. People aren't going to get in there if they hear this loud bark from a dog. I don't know. We take a little bit of liberties there. I mean, a tiny little toy chihuahua, maybe not, but anything of a decent size. Not only can you deduct the cost of the dog, but any dog food, vet bills, all of that attached to it as well.
Interesting. That I'm sure that comes in handy because so many drivers have pets with them.
Absolutely. Yeah, we have drivers that take, I mean, we have one that it's a husband and wife team. They have not one, but 2 Rottweilers with them.
Oh, yikes.
So, yeah, I know. It's pretty interesting. So,
yeah. Okay. So, if I don't make quarterly tax payments, what happens?
Okay, I'm going to let Jim Jurgens, our CPA, answer that one.
Yeah, if you don't make quarterly payments, then what happens at the end of the year, then the IRS will penalize you for not making the proper timing and the proper amount of estimated payments. But the penalty is not onerous. It's relatively small, and we will add those penalties to the return when we file the return. So we do take into consideration if you have or have not made any estimated payments, and we will adjust the tax return to include those penalties. Like I said, the interest and the penalty that the IRS charges is a very small amount. So a lot of times it's just not material.
Okay. And what about somebody asked, I only have an employer identification number, an EIN. Can I get myself incorporated using that number?
Yeah.
Go ahead, Jim.
Okay, if that number is associated with an LLC, then yes, you can use that number. But if it's associated just with a Schedule C and not an entity as in an LLC, if that EIN number is just associated with an individual, then you would need to get a new EIN number in order to form an LLC and then to make the election to be taxed as an S corporation. And getting the EIN number is very easy. You just go on the IRS website and you can get your EIN number probably within 15 or 20 minutes, and it's at no cost.
Okay.
Okay, and by the way, Amber, what we've done is we've had a ton of clients out there, drivers that have an EIN, they think they have an EIN, whatever, blah, blah, blah. What we've done in the past is, and they're not sure if they open up themselves up as an LLC. They just, it's pretty confusing. It's not in any of the driver's wheelhouse there. That's why we're here for. What we'll do is we'll enter into a power of attorney, and Jim will contact the IRS on behalf of the client and find out exactly the status of that EIN and then what the next steps need to be taken in order to get them to that next level, which would become incorporated. And we can do all that and take that off their plate to where they don't have to spend, the time trying to research it and figure out exactly how to capture that. I mean, we can even get that EIN for them if they'd like.
Right.
So there's plenty that can be done there. And if you do have an existing EIN, just reach out to us and we can help you and let you know, where your status is, basically.
Okay. Now we had a question submitted. Can my spouse claim per diem deductions if they ride in the truck with me?
Okay, I guess I'll take it. If the spouse, if she's a driver, if it's a team, it's a no-brainer. Then she can definitely, you're obviously going to get per diem ×2 because they're a team and she's an actual driver. Now, if she does all of the logistics, if she does all of the bookkeeping, everything like that, and she basically is a big part of the team, then typically we will award her the per diem as well. But she has to be able to prove to the IRS that she was a big piece of that business, because that's what you have is a business.
Yeah, she has to perform some type of function on the truck, whether it's bookkeeping or, even part-time driving. So, yeah, she's entitled to the per diem also.
Okay. And so just a couple more questions here. If I have an LLC, how many tax returns will I need to file?
Well, generally, if it's a multi-member LLC, then what that means is if there's more than one individual that is a member in that LLC, you will file a partnership return. If it's just a single member LLC, then all of your trucking income and expenses will go on your 1040. So you will just have one tax return. Again, if you are a multi-member LLC, you'll have a 1065, which is a partnership return, and then you'll also have an individual return.
Okay.
And once again, Amber, if anyone out there that's listening so far have any kind of questions about that, we'd be happy to address them personally. So.
Yes. And the next slide, I believe, will have your contact information, and so we'll go through that as well for people to reach directly out to you. Lastly, does an LLC protect me in my personal assets?
Yes, the LLC does provide limited liability, and that's what it stands for, limited liability company. And if your LLC is sued, then they will not be able to attach your personal assets. So it does provide limited liability protection.
Okay, perfect, awesome. All right, and now we're going to go to the next slide, which is getting in touch with Trucker Tax Service. So Again, if you're watching this at a later time, or if you have questions and you just didn't ask them now, here is how to get in touch with Jim and his team. And Jim, if you want to explain the best way to get in contact with you guys.
Well, it depends on the comfort of the driver, but we put this new process in with texting now. We even have a company that manages it for us, and it has been a very big success for us because we're able to communicate with our drivers, with our clients much quicker because they're texting us and we're texting them right back instead of them leaving a voicemail and us getting back to them or via emails, which emails seem to take an eternity to get resolved. So now we're happy to talk to you live and go through things, with any kind of questions you have and so forth. And or texting, actually any of the three. If now the bottom there, that's just our website, truckertaxservice.com. But you can, what I would suggest, if you have any questions, shoot us a text, and then we'll get back to you just as soon as possible, either with another text or we'll, if you say the text, hey, I'd like a phone call, I want to ask some questions, we'll get back to you within the next, as quickly as possible, I should say.
Sure. Yeah, awesome. All right, and then as always, here is our information here for TruckLogics. And so if you're watching this and you need to get a hold of us, we are here Monday through Friday, 8:30 to 5:30 Eastern time. And we have email support and phone support as well. So if you need to get in touch with us, or if you have questions and you submit them to us and they're tax related, we're going to send you over to Trucker Tax Service anyway. So you can certainly reach out to us, and then we'll get you connected if need be. Again, thank you, Jim, so much for joining us today and being part of TruckLogics Connect. I appreciate you and your expertise. And don't miss our next session. 5 p.m. is coming up soon. And we have William Binkley here with TruckLogics, and he is going to talk to you about how TruckLogics will help you manage your business in the future. So don't miss that, and we will see you here at 5 p.m. Thank you, Jim.
And thank you. You bet, and thank you for the opportunity.
Absolutely. Thank you.